Hi everybody, this is Murugan. I'm a SEBI registered investment analyst. Happy to present one another video from EQSIS. This video I'm going to talk about the recent improvements we did with respect to Option Chain. This is a tool which is very common among our traders. They find it very interesting. It's easy for them to find support and resistance. So because it's one tool by which you can understand which particular call option got a good amount of open interest and which particular put option got good amount of open interest, and it presents by filtering with various tools as well. But this talks about the strike price alone. It doesn't carry the premium along with change in open interest. So we got a good amount of feedbacks as well that they really wanted that. So we have improvised that for you to find it through Option Chain Pro. So if you look at Option Chain Pro, with respect to the current price, you get to know which particular put option got good amount of open interest and what exactly the premium and what is happening with respect to the open interest of that particular strike price. So the left hand side of this talks about the put options and the right hand side talks about the call options, and the column highlighted with yellow tab talks about the future price. So in what way it is actually interesting? So let me first explain few things. Let me take about this one. Let's say a stock is trading around 1,500. Okay. The most difficult challenge is it going to go up or down? That's what we wanted to know. I'm not sure about it, but we can get a clue by looking at call options and put options, because let's say 1,500 call option. Okay, 1,500 call option carries, let's say, about 22 rupees of premium. My question to you is, what should be the premium of 1,500 put option if it is the same calendar? If it is the same calendar, I think the rough estimation is around 22, provided if it is the same calendar. But when I verify this with the premium of 1,500 put option, surprisingly it is 30. The premium is 30. It tells me what? This is quite expensive when compared to the call option. It means the put option people are willing to pay more to buy the call option. This is what I say at the money option study. Okay, so at the money option tells me, or it gives me a clue where exactly the market is looking at. See, it doesn't mean the price have to go up or go down. Let me tell you one thing. The market expectation is actually the downside. So when other things remain constant, we expect the price to go down. So let me actually summarize this one. Is call option is expensive or is put option is expensive? By any chance, if I know the call option is expensive, then it is true that the price can go up. By any chance the put option is expensive, then it is a clue that the price can actually go down. So that's what we are actually talking about here with the first filter called, I'm actually talking about this, at the money strikes with expensive call and expensive put. Look at this one. Using one button, you get to know the list of contracts where the call options are quite expensive than a put options. Look at 145 was equally good to, I think now it's time for you people to go and verify what may be the strike price of 145 strike. So if I take a snap, okay, now look at this one, which is Adani ENT now. Okay, now I'm talking about Adani ENT. Okay, the strike price is 145. Am I right? So what you people have to do is go and verify 145 call and go and verify 145 put. Okay, I'm talking about call and put. They actually should have a similar premium. But it is true that 145 call option may have a slightly more premium because the price is 95 paisa higher than the 145 strike price. But we computed things through calculations. Still, that call option is more when compared to the put option. If it is, that is the reason why we say the call option is quite appealing when compared to this one. So we see these are the stocks got a better chance for the price to go up. Okay, so because let's go back to the old example here. By any chance, if I go for a put options, look at this one. Okay, it's 136 or 102. Okay, 165.9. Okay, now let me take about Jindal Steel. Okay, now let me take about Jindal Steel. If you look at Jindal Steel, let me take a snap again. Okay. Okay, now look at this one. If you look at the Jindal Steel, I request you to go back once again. Okay, go and see 165 call option and 165 put option. They should have more or less a same premium. In fact, a call option should have slightly higher premium when compared to a put option, because which is 90 paise higher than the strike price. But surprisingly, when you look at the fact, the put option may be trading slightly higher than the call option. So we have about we have not taken all the contracts. We have taken a liquid contracts wherein the put option is higher when compared to the call option. That's why it is actually showing me. So these are the stocks are looking slightly on a bearish note. Okay. So this is what the at the money, especially this particular one talks about it. Okay. Let me go back again with respect to what is high premium and less premium. Okay. Now look at this one. If I take a whiteboard again, see if a market is trading here, which is 1,500, okay, we know that 1,600 market got a less chance to go, and 1,400 market got a less chance to go. Okay, it depends on the premium, boss. Okay, by any chance, if these premiums, okay, I'm talking about this call option and I'm talking about this particular put options. Okay, now why especially about 1,400, 1,600? Because if you see 1,400 put got lot of open interest, that's why it has come into the picture, and 1,600 call got a lot of open interest. So this is where a trader interest is there. But my question is this premiums are actually high or less? By any chance, if I see a high premium at out of the money strikes, then it got a better chance to go either at this side or at this side. It got a lot of volatility expected. By any chance, if you see the very less premium, then we expect a less volatility to happen. That is what a market expectation is all about. Okay. So let me again go back to this one. If I use a term high premium, I think these extremes got a very good premium. Look at this one, Bank of India, where put option is 90 and call option is 95. Okay, but you see the premium of call option is 2 rupees and put option is again 2 rupees. So you got close to a 5 or 5.5, which is close to around 6% of premium, which is for next 10 days to go for the expiry. So the expiry is about next 10 days, but you got about 6%. Look at anybody is offering even more. Look at this guy who is offering 2.2, which is BEL. Okay. Look at DHFL. DHFL put option is 130, is where you see a below 130 put option. This guy is giving me 9 rupees and 150 is giving me about 5 rupees. If you take in total, I get close to 14 rupees premium. So 14 rupees is close to 10%. So look at this one. Let's take the example of DHFL now. Okay, let's take the example of DHFL. So if I take a DHFL example, okay, let me talk about DHFL. I hope the prices, you must be aware of it. Okay, let me snap it here. Okay, I think I'm talking about DHFL. Okay, look at this one. Now the price is close to what? 132. But 130 put option, let me sell 130 put option and let me sell 150 call option. In that case, I tend to lose money if a price goes beyond 150 or below 130. Okay, but the collective premium I get is close to 14 rupees, which is nothing but 14 rupees on 130 rupees stock is actually close to how much? I'm sure it is close to it's close to 10%. You are getting a close to 10% returns by writing these options in a matter of 10 days. Okay, it means what? If DHFL is highly volatile, that's what it tells me. And one more thing, now I may be interested in looking at charts as well, because if I go to a charts, okay, now I think if you click on to the company name, it takes you to the charts here. Okay, DHFL, which got 130. So I look at now, even if a price goes down, 10% is not a big deal. I think in one shot it can actually go down as well. But for me to play 1:1, okay, I can actually play for 20% range, because for next 10% fall in price or 10% raise in price, I'm not going to lose anything. But if a price fall by 20%, Murugan may lose 10% here, which is okay for the risk I've taken for the 10 rupees on the upside. So I hope you might have got some understanding about usage of high premium. Look at India Bulls guy. This guy is giving 24 and 14. 24 and 14 works out to be close to 40 rupees. 40 rupees is not 10%, but at least we got 5% or 6%. We are getting close to 6%. So I think DHFL is proven to be highly volatile. Even it is trading on the fence, slightly on the downside. That's what our understanding with respect to DHFL. So, but anyway, coming back to this, the interesting aspect is in one button you get to know which are these guys got a good premium for you to encash by writing it. I think Eicher Motors, Havells, Nifty, PFCs, Reliance, Ultratech, these guys got a less premium. And you may have a question now. Murugan, it's quite true. Let's take another case here. Okay. Let's say this is a put option, man, and this is a call option. Okay. Let's say this is call and this is put. If a stock is trading here, naturally the collective premium tends to be less. Okay. By any chance, if a stock is trading here, let's say if a stock is trading here, I am sure the premium you tend to see is slightly more because it is trading nearer to the higher band. Or even if it is trading nearer to the lower band, the premium tends to be high. So it is not standalone. So that's what we are actually talking about here. Let's say if a stock is trading nearer to the median zone, I mean in this case, okay, now let me talk about it. If I choose medium, it means what? Look at 700 and 800. It is right at the center medium. But the premium what you get is also less. It means they are not expecting much move from the Havells. But the stock which is trading in between but still got lot of premium. If you got lot of premium where a stock is trading in between, it is an opportunity where we can sell and encash that. Okay, let me look at that particular one. It means like instead of choosing a less premium, I love to go for a high premium. Okay, look at this guys. These are the two guys stuck exactly in between. Look at 95, 90, it stays right in between. Okay. And this particular guy's got a good premium as well. I think they got a close to 5% of premium, am I right? They got close to 5-6% of premium for a short run. Okay. So it means let's go for workings now. Okay. Let's go for workings now. Now the stock price is around 92.45. Okay, and the collective premium what I'm getting is the collective premium we are getting is 2.7 and 2.8. Am I right? So we are getting 2.8 and 2.7. Am I right? So we get about what, a 5 and 5.5. Okay, so which is I'm sure it is close to 6%. So which is nothing but 6% we are getting by selling 90 put option and selling 95 call option. Okay, in what way we will lose this 5? In case if a price goes below 5.5 or above 5.5 from this level, we lose this 5.5. Okay, so for me to break even, the price have to go above 100 or below 85. So now I have to check out the charts. Is it a likely chance for a price to go below 85 or 100? So I love this particular company now, which is BEL. Okay, BEL. because BEL charts, I have to see whether it, even if a price let's say goes to 105, I lose 5 rupees. Doesn't matter about losing this 5 rupees, because by risking this, I am aiming for this 5 rupees. So in case if a price goes to 105, Murugan lose 5 rupees. But if a market stays anything in between, or even if a market stays anything here, I end up making some money out of it. So there is a quite likely chance for me to make money than losing this money. So I love to short this 90 put and 95 call to make this 5 rupees. Okay. So how do I get to know this stock and how I start working all this thing? Is actually because of a simple filter, which is a stock which is trading in median, which carries a high premium. So likewise I can also look at, but now the point is to look at Bank of India charts, okay, and BEL charts. Bank of India, for a price to go above 100, yes, we got a stiff resistance once again around 98 to 100. So even a price can actually go up, but it is on the verge of breakouts. It got a multiple bottoms. Now it is placed on top. See, but if a price goes up, it can go up. But I think price to go 105, 106 is a very less chance. It can actually struggle around 100, because we see another, the resistance around this level. Okay. But on the downside, a price can find a reasonable support at this level. Even at this level, I'm not actually losing much, because 90 below 5, 85 still I find a support here. So I think BEL we can consider creating the strategy. Otherwise, let's say I think it's BEL, and let me go for a Bank India. Bank India 100. I think Bank India got even a strong, because it is trading right inside the range. So this area we expect some reasonable support. I think I don't want to get in detail of analysis, but anyway, I hope you got some idea about using this particular combinations. Okay, and we also want to know as the day passes how the historical things actually happens. So if anybody wants to know, Murugan, which of the the extreme options, extreme call options gaining open interest, man. So I think these are the options that are gaining open interest. Likewise, anything which is losing open interest, any significant drop in open interest. Look at the Bajaj Auto. Look at the Bajaj Auto, where you see the the call option open interest is down. The call option open interest, it is one among the loser in call option, which is 3,000 is the strike price where a lot of people created position, which includes long as well as short. But now the price is slightly above. So those who have created for a short position may be at panic mode, but they are not ready to exit the position. Let me click on to this, find the historical one. Okay, what is it, Murugan? Like, can you see the name here, the numbers here, which is future price? I think it is clickable. So when you click onto this, you get the history of the strike prices along with the open interest. What exactly it tells you? I think when it comes to put option, 3,000 right from the day one. Okay, right from the day one, 3,000 put option got a good amount of open interest. Okay, but the price is now reaching that particular level, but still the put option remains there only. It means the open interest is still built on that. There is not much of reduction in open interest. Okay, but when you the call options, I mean the red is actually called as call options, and the put option is actually the blue one. Okay, so the price back to 3,000 range. So we look at the charts of Bajaj Auto now. We look at the chart of Bajaj Auto, and if you look at this particular one, sometime you might have noticed till the expiry the price can actually range around 3,000. By any chance, if a price, let's say by tomorrow, if a price goes above 3,050 levels, then the short covering can quickly make the price to go up, because so long the call short people can feel the pressure and it can go up. Okay, likewise you can actually choose any of the instruments. So if you're interested in Nifty, okay, now look at this one, Nifty March contract. Okay, let's say if I trade Nifty March contracts, So it's better you use this particular one. Okay, let's say if it is less expensive, Nifty March contract, if I click onto this one, if I click onto this particular one, you get to know the Nifty. Look at the resistance. I think from March 5, the resistance remains at 11,500. Now we are actually approaching towards it. So now we know that, but the open interest is also firm. I think if you look at the resistance open interest, it is same, but the support open interest is actually getting higher. It means even if a market comes down, 11,000 is going to be a strong support, but nobody is now talking about 11,000. Now people question is, will it break 11,500 or not? But we still respect 11,500 is expected to be a stiff resistance for the price to behave. But sometimes you see the price can cross and go beyond. But how the call and put behaves over a period of time, I think in our previous option chain tool, you get to know only what is today's position. But in our updated version, you get to know the historical. But how do I find the historical data? Only by clicking the price of the contract. So if I click on Havells, if I want to know what exactly the Havel behavior is, I click onto the Havells behavior. You get to know the Havel price is here. This is the call option. This is a put option. How is the open interest behavior? But if you want to know the details of it, I request you to go back and check your fundamentals and with respect to when should I buy the call options and put options. So if you got any questions, you can write it at the comment sections, and your feedbacks are most welcome, because your feedback tends to motivate us to work more with respect to it. But we see how well we can post few more videos, explain about on a day-to-day basis using this particular filter. So let me summarize once. Okay, very interesting tool is any stock which is trading at the medium range, right in between, but carries a high premium, good for writing. Number 2, anybody who is trading at higher band, I think these guys are trading almost at the resistance level. Okay, I think today lower band, no stocks we are finding as lower band, so that option is not there, but it will come up in future. But Reliance is almost trading at resistance, it's what tells me. So this carries a good premium or more premium, I want to know. Reliance carries less premium. See, that is interesting. Look at this one. Reliance is trading almost on the resistance, but the premium is also less. That tells me what? I mean, quite likely that stock may have some sort of consolidation to the negative, not immediate upside. But remember, by any chance, if a price starts moving upside, the short people who have taken a lesser premium may feel a lot of pressure as the price starts moving upside. So unwinding pressure is also likely. But when other things remain constant, this is expected to have some consolidation for the nearby. So I think this combination, which is, let me talk about this one. I think I see this particular combination can really help you. If not, the medium combination with respect to high premium, that can also help you. Okay, this talks about where the price is, this talks about how is the premium. The change in open interest tells you like whether the people are firm about support and resistance or not. A lot of people really wanted to know this particular one, that is also implemented. This particular one, when at the money strike price, which I was explained it first. Okay, and I hope you also see when it is all updated. So if you click onto this particular one, it takes you to the historical one. So I'll show you. If I click onto this particular one, it shows me how is the historical one. Look at this one, 1300 call option. Okay, now 1300 call option was proven to be a stiff resistance for so long. Okay, but the price was respecting it for some time, but it managed to cross that. It means what? This call option people should have run out of the market, but they are still firm. Okay, and the premium is also thin. So it's quite likely that it can come down to this range to get settled. I think the price to watch with respect to Reliance is around 1300. Okay, now there are a lot of assumptions I might have explained while explaining this concept. So nothing is foolproof for me to make recommendations, but it is all about a constant research. So if you see any further scope to improvise this particular video, your feedbacks are welcome. Make a comments in the below section. Thanks for watching this video all the way till this time. Thank Thanks for watching this video.